right. What is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin in the crypto markets. Welcome in, everybody. We are seeing a little bit of volatility on Bitcoin today. Thank you guys for being here. It is towards the end of the year here, and let's finish out the year strong. Go over some Bitcoin. We can go over some of the altcoins today. Talk about what could happen in 2026 with Bitcoin, with the larger crypto market. But I just want to welcome everyone in. Welcome in, Yeshwanth. Much love to you as well. Glasshopper, welcome in, and good afternoon to you as well. Steel and Stone, welcome in. Full Port, it's good to see you, man. It's been a while. R Pink, welcome in, and thank you for being here. Thank you for modding for me. And yes, please hit the like button, guys. Glasshopper, thank you for that. Warthog Thunderbolt, welcome in. Mo Daddy, welcome in. Crypto Wander 1, welcome in. And guys, we are here. Bitcoin is dumping. We are seeing the FOMC minutes come out right now. Actually, FOMC minutes was expected to release today. Let's see, today, 12 p.m. my time here, and we are seeing some volatility happen from right now. Bitcoin's dumping. Earlier today in the Telegram, I did post that I am short. I did short from this golden pocket value area high rejection up here. We did see earlier in the day hit into that golden pocket, into that value area high. We dropped a little bit, but made one more high. And then once we lost that again and kind of fell back inside the volume profile, I shorted. So I am short from about the value area high here. Stop is above the high, and I am overall targeting the 86.3K lows down below. That is a pretty good risk reward ratio short here, and I will be looking to possibly take this down even further. But we'll see how this reacts here. Bitcoin did come up and into this resistance area. Now, as we were coming up into this resistance area, we were seeing a couple of interesting things on our order flow. If we look at the order flow here, and this is aggregated open interest, so this is taking into account most of the major exchanges. A lot of this push up that we saw earlier today was a short squeeze. It was shorts getting stopped out or closed, liquidated. You can see our CVD is rising overall in here, and CVD is just market longers or market shorters. So CVD is going up like this. That means it's long position stepping in. But we know those are not new long positions, because if we look at our open interest, your open interest is dumping the whole time. So it's not new money that's coming in, new long positions pushing the price up. It is a short squeeze. It is late shorters getting stopped out or liquidated, which when you get stopped out on a short, it's a forced market buy. That's why we're seeing that CVD go up there. So we had the short squeeze pushed up into our resistance. And then once we hit our golden pocket, this is where things got really interesting. Let me zoom in on the 5-minute chart here. And you can see once we kind of pushed up into that, let's get this situated here. Once we pushed up into that golden pocket value area high, we saw a lot of fresh short positions entering the market, including myself, by the way, in that general area. So it was either a recipe for a continuation to the upside, or that level was actually going to reject us and we were going to start dropping. So you can see here on the open interest, right, and in this general area, we had a lot. Actually, it was really towards this part, the second tap of that golden pocket, a lot of fresh shorts coming in, and those were fresh shorts because your open interest was increasing during that time. Fresh shorts successfully pushed the price down, pushed it back inside of our volume profile, and now we're losing the value, the VWAP on both Coinbase and Bybit. We're starting to dump and lose the VWAP here, and this could have been a pretty aggressive flat correction in here. We did come up and pretty much hit that 1.618 Fibonacci extinction, which is a pretty aggressive target for an expanded flat correction. But this now could dump and take the liquidity at 86.3K, or at least come down to take out our lows from the yesterday and from Monday. Yeah, from Monday, yesterday. So I am in that short position. Let's see if Bitcoin dumps here. We also had this fair value gap in here, guys. We had a nice imbalance in the market, this fair value gap. And once you start to push up into that fair value gap, you're going to get sucked up in through it and fill that fair value gap. So it was expected once we started kind of breaking out of this rising triangle here, or whatever you want to call that, you push up, you break through that fair value gap, you hit into your resistance. Now, as far as confirmations on the chart, there was not a lot of confirmations as far as bear divs go. Money flow also looked pretty good here. Money flow looked pretty good. There was no bear divs on the chart. So this one was a bit of a complex trade. The only reason I entered this trade is because, first of all, I am looking at, it's highly unlikely that the market makers are going to leave that liquidity on these two lows and really even the 86.3K low. And so as soon as we lost that first high around 88, really around 89,000, that is when you can enter the short once you lose that prior high and put your stop up above the local high. So it was a bit of a more risky trade. We didn't have confirmation necessarily to enter the short there, but I did let you guys know in the Telegram, hey guys, I am entering short. Stop is above the high. TP1 will be that 86.3. And maybe not even TP1. We'll see what happens. I'm going to pull our golden pocket real quick from the lows, and actually we'll go from these lows here. Yeah, golden pocket. Man, I don't really like where the golden pocket's coming in at. We're probably going to be looking closer to that 786 because that 786 is going to be where your point of control is. And so if we are going to bounce to make a higher low, we might see some sort of bounce from the 786 and continue up. But to me, overall, this looks like it could be a flat correction in here. Your flat correction, your C wave is generally an impulse that ends on a high amount of volume. And we did have late longers and some fresh shorters stepping in here, making it a pretty healthy move to the downside so far. So good afternoon, everyone. Massey33, good afternoon. Dr. Rex, good afternoon. Welcome. BTCC champ or BTC champ, welcome in. And Mikey3693, good afternoon to you as well. But guys, it's not going to be too long of a live stream today because nothing has happened. And I talked about this before Christmas when we did that live stream, and even on Friday when I did the live stream on Friday after Christmas. We really were looking at, we're in holiday price action. We're in holiday end of year price action. And when we're in that end of year price action, it's slow generally. And I was saying that it's highly unlikely that we resolve this bigger range that we've been in until the new year happens. But even within this bigger range, we've been trading for the past couple of weeks now within a smaller range. And I even said over the Christmas break and Christmas weekend, it's highly likely that we stay inside of this range. And so this is kind of what I've been focusing on. The markets have been really boring, crypto markets at least, and focusing on just trading this range. And so sure enough, we bounced from the value area low of the range yesterday. We were able to actually break back up above the POC, and then we broke up today to test that value area high, golden pocket. So if we're going to continue to range within this range, what do we look for, guys? We look for shorts near the lows of the range or at liquidity levels. And we look for, we look for longs near the lows of the range or liquidity levels. And we look for shorts near the highs of the range or at certain liquidity levels. And so that's just kind of what I'm keeping it on right now. And I just saw an opportunity to possibly enter short here, get a small scalp. And that's what I'm playing for now. This is what the market's giving us. So we got to trade what the market gives us. Be patient here. And we'll see how this works out. We'll see how this works out. I am open to taking profit, at our golden pocket or better yet, our 786 down here. If we do start to bounce and we see some maybe hidden bull divs or local bullish divergences as we're coming down to this area, I'm open to closing that short or at least 50% of the short and moving my stop to break even. So we'll see what happens with this. But overall, guys, nothing really has changed in the past couple of weeks. It's been a very slow, very kind of arduous process of the overall back test of our Fibonacci channel. Let me go ahead and turn off these naked daily points of controls. And we're just kind of chopping around within this range. I did say it was highly likely that we were going to form a range within this area. And if you remember, even before we tested it for the first time, we were bouncing from 80.5K. I did expect us to come up to back test that general anchored VWAP and that general Fibonacci channel. But after we rejected there, I said, you know what? We might range in here for a bit, guys. We could even range in here for a couple months. And it looks like we are, I'm just curious here. How long has this range been for? So 40 days, almost 39, 40 days. And honestly, it could continue for another week or 2 weeks. But that's just kind of what I'm looking at here for Bitcoin. As far as our indicators go on the daily time frame, our money flow is nicely curving to the upside now on Market Cipher B, and we did get a nice little trigger wave here, but this is not bullish divergences on the daily time frame. And really, if we want to see some nice bull divs come in on the daily time frame, taking out that low at 80.5K, if we can maybe move down there quickly and see some nice regional bull divs on the daily and maybe even some local bull divs on the daily coming into that 78K support, would be potentially a nice long opportunity, even if it's a long opportunity to just come take out the highs up here before falling again. So that's something I'm going to be watching for over the next weeks, months. But for now, all we can do is trade our small range that we're in. And that is what I'm doing here. Rejection from golden pocket, rejection from value area high of this small range. And let's see if we get the dump here. I just want to check this out. Yeah, and we were pretty far away from that VWAP. So here's the thing, guys, today, after we rejected from the golden pocket, if we wanted to maintain our bullish momentum, because we had kind of created some space between the VWAP and our price action in here, if you were to drop down to that VWAP, you really wanted to see a strong bounce from this VWAP, and you really wanted to break local market structure and bullishly and continue. That would have given us higher probability that we're going to break up and potentially come up to like this 91 to 91.5 area. But it didn't happen. We saw a lower high, and now we're starting to lose the VWAP. What we need to watch for right now over the next, hour or so, next minutes to hours, is the back test of the VWAP. So if we come up, back test this VWAP and reject, it's in some ways going to be confirming the VWAP is a flip to resistance on an intraday trend. And yeah, we're going to probably push down a little bit further here. Let's see here. Can we grab the liquidity, that 86K Wix liquidity? That's Alexander. That's what I'm looking at right now. So yes, I do think it's absolutely possible that we grab that liquidity around 86.3 to 86K. And if you guys watched my video yesterday, I talked about this, how we still do have that liquidity resting down there. If we look at just the last week of price action, we have locally, that is really the only liquidity, and there's a fair amount of liquidity down there. So I would be expecting that the market makers are going to come down there and grab that liquidity, even if we're going to move up to 91K or 91.5K before overall bouncing. I think that we might see that liquidity grab into 86.3K or 86K, come down to this area, grab liquidity, and then we might make a move up to 91K before dumping down and taking out, some bigger, dumping down to bigger support levels down below. We'll see what happens. But we trade what's in front of us. And this is our sideways range that's in front of us. It's been about 15 days now. Sideways range, very clear. Took the little short, intraday short here. We also, a few days ago, guys, when was this? This was on December 28th on the Sunday, that weekend high. And keep in mind, this is a weekend high, so it is likely to get taken out sooner than later. But this weekend high was into a naked daily point of control, and it was into the top of our pitchfork too. This is our local bearish pitchfork that we pulled last week during the stream. I was just giving you guys examples of how to pull these pitchforks. And with this pitchfork, let's just zoom out to the 8-hour chart real quick. We had pulled it from, and this is on the Coinbase chart, so it's going to look a little bit different on Bybit or Binance based off those huge wicks from October 10th that wicked way lower. But pulled from the all-time high down to our first big low. For Coinbase, it was on October 17th, I think that was, October 17th, up to that higher, lower high that was created when we took the liquidity of the sideways range. You can see here we took liquidity, and then we really started the dump here. So this is our bearish pitchfork, and now that we're back inside of it, we kind of been respecting the local levels. And on December 28th, we did reject from the top of that pitchfork. It was also that naked daily point of control. Keep in mind, that was on a Sunday. That was a weekend high. And we did front run some very key liquidity of semi-equal highs, being the weekend high from a few weekends ago and the highs that were pretty much in the same area. And yeah, I'm just looking at now, are we going to see, this overall downtrend continue, at least to take out liquidity? Quiles 1100, welcome in, man. Thank you for being here. Retest 88.3 for a new short setup if I missed the top or too late at this point. Okay, let's check that out. 88.3. Let's zoom into the 15-minute chart. And 88.3 is going to be about, well, we're retesting the VWAP right now, guys. This is actually really important what's going to happen right here. Because if we reclaim it, looks like we are starting to reclaim this. If we reclaim VWAP here, and I want to check out our order flow right now. Let me just refresh this. Yeah, okay. So we're seeing some late shorts just get we probably saw some shorts come in on this candle right on that FOMC minutes release. And we're pushing up right now. So, but we're pushing up and you can see we're dropping on our open interest. So this is just a little bit of those late shorters that shorted the FOMC that are getting out right now, which means on short squeezes, guys, if we on a short squeeze, you can just roll right back over if you don't have new money, new long positions come in to support that short squeeze. So we'll keep an eye on this. Now Bybit VWAP is a bit higher, and we have to keep the two main exchanges I look at are Coinbase and Bybit. So I'm going to be keeping an eye on that Bybit VWAP as well. But can we short 88.3? Now, I don't know if I'd be shorting 88.3. Let's pull what we can do now because we have technically broken market structure bearishly, right? So let me get rid of this golden pocket and we're just going to focus on this price action that we've been seeing throughout the day. This price action here, our daily trend so far, intraday trend, higher high, higher low, higher high, higher low, higher high, higher low, higher high. Now, once you break your local market structure, I would say these lows right here, once you break that bearishly, now that is a bearish break in market structure on lower time frames. That is considered a bearish break in market structure. Because we broke market structure bearishly here, now we can pull our Fibonacci from the highs, the local highs, to the lows that we just made, and we can be looking between the golden pocket and the 786 for a potential lower high to come in on the charts. Because after you break market structure, you have a greater probability of putting in a lower high before another lower low and starting a bearish market structure. And so for me, I wouldn't be shorting 88.3. I would be looking at 88.8 around this general area, golden pocket, or even 89K again. And 89K, value area high 786. There is a possibility now that we're back inside the volume profile. You can see we tapped volume profile, value area high, saw a small rejection, but was able to maintain market structure bullishly. And then we pushed up. We grabbed the liquidity internally of the highs. We attempted to break out of that volume profile. This was an attempt to break out of the volume profile. But when we rejected from the golden pocket and fell back inside the volume profile, that means that this could be classified as a fake out of the volume profile or a failed breakout of that volume profile. So anytime you fail to break out of a volume profile, you'll generally come down to local support being around the VWAP or, whatever levels there. Say there was a local, another local level there, an EMA or something like that. And then if you do bounce from that area, you'll often come up to back test now the value area high again to confirm reacceptance back with inside the volume profile. And if you do reject on that bearish back test of the volume profile after finding reacceptance back within, it confirms reacceptance back within. And then you're probably most likely going to dump to your POC. And then, of course, if you lose POC, you look towards value area low. So that's just a local volume profile trading. It's a volume profile strategy of trading. We'll see what happens. Right now, we're just watching this general area of the VWAPs. If we start to push up a little bit higher here, then I would expect to come up to the golden pocket 786. And you can see this golden pocket does have internal liquidity resting there. And I understand it is very small liquidity, and it's really like an intraday liquidity, not much there. But this area here at 88.8 is right where your golden pocket is. So seeing that there's a little bit of some liquidity that we could take before coming back down. And then, of course, the 786 in value area high is a little bit better of a level to be looking at for me. And honestly, that would be, if you did miss the short from 89K, that's about right where I'm in at as well, as 89K. If you did miss the short from 89K, then what you could be looking at is if we do come back up there and we start to reject, that still could be a good short trade. You could short this area, stop above the high, very calculated risk, and then even just targeting the POC of the range, that's still a 4.5 to 1 risk reward ratio. But if you want to, have maybe a TP2 at that 86.3, that's a decent scalp short trade there as far as risk reward ratio goes. So let's keep an eye on this. Okay, you got into short at 88.6. Okay, Alex, awesome, Alex. I would just now, hopefully you did calculate your risk on that, your position size and your risk on that. We do have an anchored VWAP in that general area. Let me zoom out and make sure, because sometimes trading view is weird. Yeah, okay, around 88.550, 88.530-ish, we have an anchored VWAP, and locally, the anchored VWAP is not being too respected, but you can see even here, like the anchored VWAP kind of flipped to support for a bit, and then we lost it. So maybe now this anchored VWAP will act locally as kind of a resistance in this area. But if we break up a little bit too much higher here, I'm really going to be looking towards that golden pocket. Let's check this order flow. What is happening here? Yeah, it's still just a little bit of a squeeze right now. A lot of people probably shorted that bearish FOMC news. It's going to be interesting to see what happens here at 88.255, where the Bybit VWAP is. Okay, I saw the golden pocket, but super aggressive for me. Good job. I'm more relaxed trader. Yeah, Alex, I understand that. And it, like I said earlier, a couple minutes ago, there wasn't really confirmation to take the trade. I guess in some ways, I'm human too, and I was getting bored. Like we were not seeing any good trades. I missed the trade because it happened at night for me, pretty late at night. I missed this short position up here into the naked daily point of control and into the top of the pitchfork. And that was a level I was interested in looking at shorting. And so I was, it sucked. I haven't really been able to get into some trades. And when we lost this prior high after and fell back inside the volume profile, even though we didn't really have confirmation to short, I said, you know what, I'll give it an attempt. I'm not even risking 1% on this trade. So risking about 0.7%. Very small scalp trade for me. So even if I lose it, my risk is calculated. And you know what? If we start to break the golden pocket at 88.8, I might just close that thing out and look to re-enter if we do reject from the 89K, which is pretty much where my original position was anyways. We'll have to see how that is. I don't know. Maybe I'll just leave it. Let it get stopped out. Are you still into 78K? Yeah, CJ, overall, I do still think the higher time frames are showing that we are going to make new lows. As far as this entire push from 80.5K, let me hide this pitchfork here. This entire range that we've seen so far, there is nothing in here so far yet that tells me on a more macro scale that this is impulsive price action. Actually, just look at it, guys. It even looks like just a corrective range that often forms, and it's a very important range, a higher time frame macro backtest of some macro trend structures. We rejected 3 times already up here. And to me, it looks more corrective. So no matter what happens within this range here, we could come up and take out the highs at 94.6 again. We could even come up to test that gold or that macro point of control around 96.5. But even if we come up to 96.5, I would be looking for a rejection from that general area and then a drop down. So within this range, could we come up and take out the highs of the range one more time? Sure. Could we come down and take out some internal lows first and then come up and take out the highs? Sure. A lot can happen still within this range before the overall more macro structure does continue to the downside. But I do think so far, nothing has really changed the bias. We're making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Overall, I would say this was the lower high, and so far we're just grinding sideways now, kind of in consolidation. So, overall, maybe we should be expecting a lower low. Yes, within this small range, we have broken some market structure, high, higher low, higher high, higher low, higher high. So that was some bullish local market structure, maybe suggesting we could get a flip of the overall bigger bearish market structure. And this is where it gets a little bit confusing on timeframes, guys. The higher timeframes are still suggesting bearish market structures in charge. But if you zoom in and look at this, that locally, at least in this area, we were in bullish market structure, and we expected to come up a little bit higher until we broke that bullish market structure. But we did break that bullish market structure. We came down at least by breaking this low, excuse me. We did break market structure bearishly by breaking around 87.7. We broke it bearishly, and then we've been chopping sideways right around those lows. It's expected because we're at the end of the year. There's not a lot of people trading right now. A lot of the big traders and institutions and quant firms that trade, they're off on the holidays. They're not worried about this right now. They're closed for the year. They'll reopen their trading, their accounts, their portfolios next year once the new year hits here. So we're just looking at low volume, retail trading, just scalp traders, day traders. Sure, there's going to be some big spot buys maybe at the end of the year. We're looking at some bigger companies, institutions, maybe resetting for next year. But overall, I think that we're just in low volume holiday chop in a holding pattern, essentially. A holding pattern waiting for the new year. And Jaffiel, welcome in, man. Good morning to you as well. Hope you're doing good, man. Happy New Year's to you, Quiles 1100. And yeah, guys, God bless everyone. I hope you guys all had a good Christmas. I hope you guys all do have a good New Year's. If you do go out, I hope you guys be safe, but have fun, enjoy life. And yeah, take some time off the charts if you guys need to. Especially, here's the thing, guys. We knew it was a very high probability that we were going to continue to range not only within this bigger range, but within the smaller range. We were likely to range throughout the Christmas week and really maybe even through New Year's within this smaller area of price action. So if you're not really interested in babysitting the charts with scalp trades and looking at these scalp trade opportunities, then take some time off right now. Take some time off to reset, rebalance the mind, just get away from the charts for a bit. Let the body kind of decompress, the mind decompress, and then come back with the new year with renewed focus. And so I've been doing that a lot. You guys have noticed I probably haven't been, at least last week for Christmas, I did take a few more days off than usual. And even probably towards the end of this week, I'm not so sure I'll be streaming on Thursday. Thursday I probably won't be. And then Friday, I'm not sure if I'll stream on Friday. We'll keep an eye on that. I'll let you guys know. I guess it depends on what Bitcoin's doing. If Bitcoin's still just chopping around doing nothing, I might just maybe do a 15, 30-minute stream. Other than that, guys, there's nothing to update on. There's nothing to update here. You shorted Sol. Okay, Jaffiel, we'll look at Solana. We'll look at some of the altcoins here. Glasshopper, thank you for that comment, man. I appreciate that. Can you please check once, as looks like BTC is forming a triple top at 90.5 level on 4-hour and daily time frame? Yes. Okay, so you're right. And I'm on the 4-hour time frame right now. Let me hide this volume profile real quick and let me get rid of that for a second. But you are absolutely right. So not only do we have these highs, and I know these are internal local highs, but these are weekend highs. This was a Saturday high at 90,657 on Coinbase. And then we barely front ran, taking the liquidity from those highs on Monday, December 22nd. And then sure enough, last weekend on a weekend high on a Sunday, we came up and we made a lower high, but very close to the liquidity of both those highs. So we have like a very good liquidity trail going here, where if we are going to see a breakout here, what a lot of people would be looking for is a resolution of this range. And it could happen through the New Year's, or maybe even on New Year's Day. I know on Christmas, we got a little bit of a Christmas pump and dump. We could see something very similar where we come up here. A lot of people think we're breaking this range to the upside, only to hit into our golden pocket, taking the liquidity of all these three highs, and then just reverse and come right back down here. So yeah, I am still looking at that. You can see there's a purple box on my chart for a reason, and this is the swing failure pattern into the golden pocket, into an anchored VWAP, and I am looking for potential shorts from this area. Now, we'll have to see because we could come down first, and I actually think that's likely that we're going to come down first, and we're going to grab some local liquidity from some local lows before coming up there. But I don't know for sure, so we'll play both sides. We just mark out your levels of interest and you trade whatever the market gives you. But yes, I do like that liquidity, especially with these three kind of lower highs very significantly close to each other. And even this, well, this liquidity's been taken with this guy, but yeah, please smash the like button, guys. Please subscribe to the channel, share the video with anyone you might think finds it interesting. We'll check out some of the altcoins real quick here. Let me check out, before we check out the altcoins, I just want to check out Bitcoin dominance very briefly here. See what's going on with Bitcoin dominance. So we are coming up into that resistance that we had marked out. This resistance here, so it was a more local 786 Fibonacci, but it was our bigger 0.5 Fibonacci. Let me just pull this volume profile there. So it looks like we're at the value area high of our range. This range is kind of our range since we broke the channel to the downside. And for those of you that haven't been following me for a while, let me just give a brief overview, summary on this channel and what's happening with Bitcoin dominance. So for a majority of this bull cycle, Bitcoin dominance, Bitcoin has been the star of the show. You can see since March of 2023 here. So, almost 3 years now, Bitcoin dominance has been in this upwards trend. Very, very clearly, Bitcoin has been the star of this bull market. A lot of the crypto liquidity has been going into Bitcoin. Of course, with institutions getting involved, we expect that. But we came up on, let me just zoom out to the 2-day time frame real quick. We came up to the top of the channel, and when we hit the top of this channel right here, I said, guys, expect that this could be a big reversal point. Well, as soon as we hit the top of the channel, we dumped to the midline. You can see we did see a bounce from the midline, which the midline historically, locally, and in the past was acting as support and resistance. It was a nice support resistance area. We bounced from the midline. We came up and we took out those highs, not quite into the top of the channel again, but we took out those highs and then we dumped. So I know that Bitcoin dominance isn't liquidity per se, but you can look at it in the same way. It's traded psychologically, sometimes in the same way. As we were coming up, higher highs in the price action, lower highs in the momentum waves, and by then money flow was draining out. Markets, NAMI was confirming bear divs as well, and then you can see bear divs on the money flow. So we were expecting a potential bigger reversal on Bitcoin dominance. We got that dumped to the bottom of the channel. The bottom of the channel tried to hold us. We wick past it, kind of chopped around at the bottom of the channel. But we retested those prior highs, or prior lows, excuse me. Retested those prior lows, and we really couldn't sustain and maintain above them. And then we dumped, I was looking at between the golden pocket and 786. So if we turn on, actually, let me turn on both of them. You can see pulled from, and by the way, this midline here is a weekly channel midline, a much bigger trend on Bitcoin dominance that goes back, I think, 10 years or so. So we bounced from the weekly channel midline here. We came back inside the channel, the 3-year long channel, bounced, flipped it to support, came to the top, pretty much came to the top. And then we, came to the bottom here. But once we lost it, now we can pull our golden pocket from that last significant low to the highs. And the golden pocket 786 area, we lost the golden pocket. We flipped it bearishly, and we never came down and actually hit this 786 at 57%. And I was actually very surprised that we didn't hit that 786. But since then, we've been in a sideways range. Really, this is our sideways range that we've been in on Bitcoin dominance since we've lost the channel, going sideways overall. Yes, a little bit more up and then a little bit, but overall, that's kind of our sideways range that we're looking and focused on right now within the Bitcoin dominance. And so now we can zoom in on this and we can just trade this range, or we can look at this range as far as the Bitcoin dominance goes. And sure enough, we bounced last time. Let me get rid of this golden pocket real quick here because that had been chopped through a lot. So we're just going to put the 786 on down there. This wick was from October 10th. It did push up pretty significant, but overall, our sideways range is this general area. And we bounced from the value area low. We did have some bull divs locally on the chart. Now we've worked our way up, finally broke above that POC, and we've worked our way up to the value area high. So bounce from value area low. Now we're at resistance at the value area high. And if we're going to continue to range within this range, then this area here, this purple box we had marked out on the chart, was a good area for dominance possibly to drop here. We also could be looking at a topping reversal pattern, left shoulder here, head here, maybe a right shoulder again, and then we could see a drop here on Bitcoin dominance, which means that altcoins could run against Bitcoin, or that Bitcoin is dumping more than the altcoins, which is less likely in my opinion. So that's just what we're looking at. We're at resistance. Our local 786 is there. We had our 0.5 Fibonacci pull from these highs to these lows. And it's also the value area high of the range. We had a naked weekly point of control in there. And do we have bear divs? No real bear divs yet on that. But this is what we're just looking at right now. Bitcoin dominance is at value area high. Let's grab this and see, was that a break? We did have equal bottoms here, and I don't like that so much. So I'm not really a pattern trader, but I do pay attention, especially to like topping reversal patterns and bottom reversal patterns, which, you could classify as a Wyckoff distribution or a Wyckoff accumulation in some ways. This could be like that left shoulder, head, right shoulder, or what you would call a model 2, tap 1, tap 2, tap 3. That's your little distribution range in here. And then if we lose that, it's like losing your neckline, but really you're just distributing down from that distribution range. So that is something we can look at potentially happening here within the next couple of weeks to a month on Bitcoin dominance. For now, let's pull this golden pocket in here, and I want to see, did we haven't quite tapped that golden pocket yet on Bitcoin dominance. So, man, it would have been nicer to actually tap that. Okay. Yeah, we might continue to rise a little bit on Bitcoin dominance, at least. Okay, that pretty much is it. So, but we're just looking at this range, and guys, we're near the value area high of the range. We're near resistance. We could get a drop, and even to get a drop to take out this liquidity at like 58.9. We could pull our golden pocket also from the last lows to the highs. Yeah, and your golden pocket's going to be right around some of that internal liquidity. All right. We can check out Portal. We can check out Solana. Before you look at small alts, can you check out ETH? Yes, we will check out ETH right now. Yearly candle is going to close like half a meatball garbage. Yeah, man, the yearly candle. Let me go back to Bitcoin first. I want to go on to a clean exchange, and let me look at that. Dang. Yeah, I mean, that's not the best looking there. This is Big It, by the way, guys. That's why there's not a lot of history there. There's your index chart. It just looks like, I mean, if you talk about a chart with diminishing returns, that is really starting to curve over here. Let's hope that Bitcoin can keep going really strong, but who knows? All right. Ethereum. Okay, so as far as Ethereum goes, I posted about this a little bit in the video yesterday, but very similar to Bitcoin, we kind of have our sideways range in here. And the big levels within this sideways range, well, there's a couple big levels. Let me give it a brief overview first of what we're looking at here on Ethereum. And I'm going to hide some of this to clean up the chart a little bit. All right, let's hide this as well. All right, so for Ethereum, we bounced from the $1,400 lows. That was our macro range value area low. of a 4-year long range, guys. At $1,400, we bounced from that value area low. And if we look at this range, you can see this range goes all the way back to May of 2021. So a very significant range here for Ethereum. Once we bounced from that value area low, we did impulse up pretty amazingly. You know, we were chopping around in the lower band of the pitchfork for a couple weeks. We were able to maintain it. We pushed up. We started chopping around the midline. And then we lost that range, grabbed the liquidity from the lows of that range into your anchored VWAP, and it was also into a golden pocket. And that golden pocket was from your prior range lows. So if you pull your prior range lows in here, this guy right here, those prior range lows to that high, you can see you hit right into that golden pocket. But that was with the wick, but the daily candle closed above or at that anchored VWAP, which was very key because these anchored VWAPs are measuring the strength of a trend based off volume. And remember, volume is one of the most important things in the market because wherever the volume is, that's where you tend to get reactions on price action. And so when we did bounce from this anchored VWAP, we expected to make new highs above these local range highs. And sure enough, we did. We pushed up, we broke above the upper band of the pitchfork, flipped it to support locally, made a new high, grabbed a liquidity within this small range. Then we dumped down and retested the bottom of the band as support. We bounced, and then we came up to the the top of the pitchfork. Now, in this area was very interesting. As this range was forming here, I was telling you guys it was highly likely to be a distribution range. And I actually warned about this. Go watch my videos back then. As this range was forming here, we were confirming significant bearish divergence on the charts, and money flow was draining out as the range was forming, making it more likely to be a distribution range that would break to the downside and distribute down. And that is what happened. It was also at the top of the pitchfork, macro resistance up here. So, you know, a few taps at the top of the pitchfork, rejected it. And then look at, this was the October 10th dump on Coinbase chart. We dumped to the bottom of the pitchfork band again. We bounced directly from the bottom of the pitchfork band. It was also a 0.5 Fibonacci. Pulled from your last lows to your highs, your all-time high. It was the 0.5 Fibonacci. And if we were, because if you guys were with me back then, I was actually still bullish on Ethereum, looking at the larger 5-wave impulse to the upside to finish, wave 1, wave 2, wave 3. We were looking at a wave 4 to come down between the 382 and the 0.5. And then we were looking for a wave 5 to come up to right around $6,000. But we couldn't hold this support here. Very significant that we couldn't hold this because if we would have bounced there and saw a nice impulse up from this, yeah, I would have been expecting $6,000, maybe even $7,000. But we couldn't. You know, we chopped around and formed a kind of a triangle in here, and then we dumped and lost it. We fell back inside the volume profile, and this was very key, guys. This day right here, this candle right here, where we fell back inside the volume profile with a nice, huge bearish candle, big bearish candle, November 4th on a Tuesday, fell back inside the volume profile and closed the daily candle back inside your volume profile, meaning that this might be now classified as a failed auction breakout of your 4-year long range. Failed auction breakout. Now, after you fall back inside, you're going to bounce from a local support, and there was a support level there. I forget what it was, naked weekly point of control, something like that. And we bounced, and we came up, and we bearishly now back tested not only the value area high of our 4-year long range, but it was also the pitchfork band that we had lost. That was support here. Now that we lost it, it could act as resistance here. And you can see I had a box marked out there. We shorted that on the channel. Let me zoom into the 4-hour time frame. We shorted this here. We were expecting a rejection from this area. We got the rejection. We fell all the way. So once you're in, as far as pitchfork trading goes, guys, we rejected the top of the pitchfork here with a distribution range. We fell to support and bounced from the band, the upper band. We bounced from the upper band, bounced from the upper band. On the daily time frame, those are just wicks down below, but on the daily time frame, you can see that upper band was holding as support for a bit, the upper part of the upper band. This is the lower part of the upper band here. But once we lost it, now you have the bearish backtest. If you reject on the bearish backtest, that means you're confirming a loss of the pitchfork band. Now, it was support, confirmed it to resistance. You confirm the rejection. You expect to drop to your next major pitchfork level. we had a box marked out here. We were looking for a long in this area. Why? Because it was your pitchfork midline. You expect to get some sort of reaction from the pitchfork midline. It was also our prior range value area high. If we pull this volume profile, prior range value area high was in there, and your non-logarithmic golden pocket was in there. If you pull your golden pocket from the $1,400 lows to the highs, now this is an improper golden pocket in my opinion, but it still does get respected because people just don't quite understand how to use a logarithmic chart sometimes. But you can see it still does get respected. Bounce from the golden pocket, make a move up. Now on this move up that we were making, this whole thing looked bearish because as we were moving up here, volume was going lower and lower and lower. But we back tested a key anchored VWAP. Remember that anchored VWAP we talked about back here, how it was flipped to support and back tested as support. And once you held it as support, you expected to make new highs above these range highs. Well, once you lose that anchored VWAP, this is your volume weighted trend. This is your trend based off of volume. It's your sentiment for the asset. So once you lose it, you bounce from a major support level down here. You oftentimes will come up to bearishly backtest that prior sentiment, that trend sentiment, just like our Fibonacci channel on Bitcoin. If you reject here, bad news, guys. Overall, if you reject here, you do expect eventually to come down to take out the lows. We have not done that yet, but since then we've been ranging sideways, and we can look at this as a sideways range in here. So we're just focused on trading this sideways range, and because it's the end of the year and the holidays and a lot of big quant firms and institutions aren't trading, we're kind of in a holding pattern here. So what we can focus on is just trading this range. And that's what I'm looking at. So if we zoom in now here, and I covered a lot of this in yesterday's video briefly, and we covered it last week during the live streams, we can look at just trading this range. And there's a couple ways you could pull this range. You could pull it looking at all the price action between the upper band and the midline. You know, you have the upper band of the pitchfork, the midline of the pitchfork. So we could pull the volume profile this way, or you could look at pulling it more after this kind of corrective bearish backtest, and it starts to go sideways here. You can see sideways and then one more push down. You can look at this volume profile. But either way, we're looking at kind of this sideways range in here. And you can see Ethereum over the past week or 2 weeks has been holding the value area low, and we're above the POC. So there is a possibility that we could push up to test the value area high in the next week or so. But overall, I'm just looking at these levels within the volume profile, within this range here. So we mark those out, and we've been looking at some of those ranges. We have our golden pocket at $3,200 that is coming in at the value area high of this range. That is going, and then we have liquidity into that. You can see this liquidity level. Grabbing this liquidity into your value area high and your golden pocket would be a potential short opportunity for me if we're just going to continue to trade this range. And because we're above the POC, there is a possibility that we could move up to 3,200 to grab that liquidity. This is an imbalance candle that has been partially filled with this area. It rejected from the 50% mark. If we look at like, well, let me just do this. Let's turn on our fair value gaps. And you can see right at the 50% mark of that fair value gap, that line right there. I don't know if you guys can see that, but this was the 50% mark of the fair value gap, rejected from the 50% mark of the fair value gap, but we still have some of that fair value gap above there. So if we do start to come up again, we're going to bust through this. It's going to just suck us up, and then we could probably get sucked up into this fair value gap, which is where your value area high and golden pocket, and coming up to 32.31, it would fill the fair value gap, take the liquidity, value area high, golden pocket, rejection. This could be a very good short opportunity from 3,200 if we get up there. We want to see bear divs as we're coming up there. Now, but even more locally, you know, we've been holding the value area low in our golden pocket, and we had this box marked out before we hit into it here on December 24th, on Christmas Eve. We bounced from the 618 and the value area low of the range. But I still think we can come down, like I said in yesterday's video, to hit the 0.65 golden pocket as well, because I believe it was a daily level that was there. No, that's this area. This one's got a daily level, 786 daily level here. Let me get rid of that. let's see, what was it there? It was a naked weekly point of control, naked daily. I'm getting confused now. Well, we do have the liquidity grab now of that low into this golden pocket still. So, and then you can see here, we have all these higher lows, this liquidity trail that is built. So if we flush down, it's likely we flush all that liquidity. Maybe we could make a double bottom and bounce from the 0.65 and then come up again. And overall, you would still be maintaining your value area low. It'd just be some wickage below it. But yeah, so for Ethereum, I mean, I'm still interested in 2879 around that area. If we get the liquidity grab, now I'm not gonna long it unless we confirm the liquidity grab. So what that means for me is coming down, piercing those lows at 2886 into your 6.5 golden pocket, and then a reclaim of those lows. And maybe if you want to be safe, you even wait for the reclaim of the value area low. Once you reclaim the value area low, you can look for the long. The stop would go below that wick, and you could be targeting first just the local highs. That's still a 5 to almost a 6 to 1 risk reward ratio, but you could be targeting that 3,200. Nice little long opportunity there. So we'll see how that plays out. That's our kind of scalp trading mode that we have to be in right now with the low volatility range that we're seeing. Below that, we have our 786 Fibonacci, and that 786 Fibonacci is just pulled from these lows to these highs. That's your 786 Fibonacci, and there is a daily level down there as well. A daily level that is coming in at 2826 and your 786. So this box would be another potential support opportunity if we're just going to continue to range sideways. But if we bounce from this daily, we do have to watch for coming up to bearishly backtest that value area low, because if we reject, then we would expect to take the liquidity here and possibly even take the liquidity really even at the bottom. Because remember, because we confirmed this bearish rejection, let me zoom out to the daily. Because we did confirm the bearish rejection here on that anchored VWAP, after losing it, bounced from midline, pitchfork midline, we bearishly backtested, rejected. Overall, the higher probability is to take out this low. The question is, are we going to see some local moves up first before taking out that low? And right now, because we're maintaining inside the volume profile, it is suggestible that we could move up a little bit before taking out that low. As far as bigger levels of resistance above, 3,600 is still a very, very key level. $3,600. We have a lot of resistance up here, and we have the value area high. And I understand it's a little bit below this box now, but we have this liquidity grab here. We have our golden pocket there. We have a swing failure pattern. That's this liquidity, and our pitchfork band. And the anchored VWAP from the all-time high is coming down into that general area very relatively soon here. So if this continues to come down here, and say we do, kind of push up here and reject from this general area, value area high, anchored VWAP, pitchfork band, you could see that. We don't know yet. Right now, we're focused on resolving this price action. But that's honestly, that's pretty much it for Ethereum, guys. I'm not too interested in trading anything very locally here now. I will say this, I don't like how this liquidity band is forming here. This little bit of liquidity trail. You can see all these higher lows just barely, because if we do start to lose it, you're going to flush it all very quickly and at least come to take out this low, and you might flush it into your next level of support before getting above it. Looks like very similar to Bitcoin, we are rejecting from a golden pocket. Ethereum's been a bit tough here because we are making higher lows. So we have our low, lower high, higher low, higher high, lower high again. Okay. Market structure is just very effed here. But then we get a higher high. Then we get a higher low. Now we get a lower high, but a higher low. So this is very kind of crappy consolidation. And just like with Bitcoin, over the past couple of weeks, we've been looking at a more sideways range. So on Ethereum, instead of looking at your bigger range, you could even look at just this price action in here and trade this. You're rejecting from the value area high of your local 2-week long range. Just like Bitcoin, we have our bigger range here, and then we have our smaller range here of the past couple of weeks. It's the same with Ethereum. We have our bigger range here, more sideways. We have our smaller range here, or you could even push it back to here. So you could pull this volume profile and include this little bit, this sideways price action here, and this would be a deviation, and then you got back inside of it. This is a deviation. But either way, you can see the value area highs at the same spot. It's at your local golden pocket. We did bounce from the value area low of the range. We came up to value area high. Value area high also happened to be a golden pocket, and looks like a fair value gap. It's not completely filled, it doesn't look like. Yeah, we still have a little bit of the fair value gap left up here, but pretty much we filled the fair value gap, a majority of it, into your golden pocket, into your value area high, and now we're starting to dump here. So it depends on what happens here, but I really do not like the liquidity trail that has been left here. This is begging to be taken out, guys. All of this is begging to be taken out. Flush down to take it out real quick. Could be a really nice long from if we flush it, take it out, and then get back above. So I hope this helps answer your question on Ethereum. I'm not sure if you're looking at trading this more macro or if you're playing the scalping this range right now. Man, on more macro timeframes, what I'm still wondering, if Bitcoin does come down to break 74K, to take out those 74K lows, or if it does even come down to 78K, Ethereum's logarithmic golden pocket is between 2250 and 2160 here. And I do think that, and I talked about this a month and a half ago, but you often do form ranges at macro support. So we're at the macro support, and we are kind of at macro resistance as well, being that value area high. We could form a range in here for a couple of months, guys, and then say we lose that. After a couple months, we lose it, back test it, and then come down to your golden pocket. This area here at the bottom of your pitchfork band with your golden pocket being here, that would be a very nice, and some liquidity that's just below that. I mean, this could be a nice swing long opportunity. 2250-ish to 2150-ish, let's say. Until we lose this midline, it's holding as support. So we might chop around here. Hold it, hold it, hold it, squeeze for a bit, and then you might push up. And if you can break back inside of this, flip it to support, you might chop in the band like you usually do for a bit. But then I would expect to break up to new all-time highs if we do. We'll have to see how it goes. Overall, macro market structure is bearish. Lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. This is your first local break in market structure here. And you have higher high, higher low, higher high, higher low, higher high. But then you broke even this low here, making it a break bearishly now on the daily time frame. You had that bearish break in market structure, and then you're going sideways because it's the holidays, because no one's trading. It's just consolidation and waiting. Patience is the game right now. So I hope that helps, Alex. Let me know what you're thinking about on Ethereum. But yeah, we are rejecting from the value area high and our golden pocket. Okay. Yeah, ETH BTC. Let's check that out real quick. ETH BTC. Here's the thing. Remember, we were talking about ETH against Bitcoin looks bullish overall. Because we do have, it looks like a pretty clear impulsive structure. So we came down, we did front run the macro value area low here. And this range is of a major range. Let me zoom out to like the 3-day chart. And I understand this is a majority of the lifetime of the Bitcoin Ethereum trading pair, but from June of 2017, we've kind of been in this upper range in here. And when you're near the lows of that range, that means Ethereum is undervalued against Bitcoin. So you should maybe be selling off some of your Bitcoin to buy Ethereum. But we did see a nice strong reaction from that value area low, and we're impulsing what looks to be impulsive price action up from that value area low. Wave 1, wave 2, nice big wave 3 right up into your resistance, grabbing some internal liquidity. This looks like a corrective move down so far in a wave 4 to backtest your POC. After breaking above your macro POC, you're going to come back for a bullish backtest. If you bounce here, maybe we're about to see a 1, 2, 3, 4, 5, a 5-wave move to complete this overall 1, 2, 3, 4, 5. And looking at 0.53 pretty much up here is a very, very key level. Your 1.618 Fibonacci extinctions up here, a naked weekly point of control, a weekly level, your value area high of your macro range. And the value area high makes sense because we bounced from value area low, we reclaimed POC, we bullishly backtested POC. If this POC holds, you expect to come up to value area high. That's just volume profile market auction theory trading. So all indications for me are that we are going to come up to value area high eventually, that Bitcoin or the Ethereum is going to break out against Bitcoin eventually. Let's see though, because we do not want to lose this POC. If we start to lose this POC and close daily candles and specifically weekly candles below that POC, we could be in some significant trouble for Ethereum against Bitcoin, meaning Ethereum could dump a lot harder than Bitcoin. Is it possible that we're going to form a 3-wave corrective move, a sort of flat correction in here? This is going to be a longer move, a longer sideways range. You come down in your initial drop. We could come all the way up to this naked monthly point of control and monthly level at 40.040, or the naked monthly point of control golden pocket at 0.38. Kind of see that lower high and then come down to hit the weekly that was front run here, making sort of that flat correction in here in a wave 4, an extended wave 4 flat correction before pushing up in a wave 5 up here. Is that possible? Yes. So we'll have to see, either way, Ethereum against Bitcoin overall looks pretty bullish. On the smaller time frames, guys, we are just in a consolidation holding pattern once again. And for me, it was pretty clear that this was a trend down here. You had your nice little channel down here. Your trend, lower lows, lower highs, lower lows, lower highs, bounced from POC, made a significant low. Since that low, this is what we need to be paying attention from. Since the actual test of the POC and that low right there, we have a sideways range. This is what you should be focused on right now for Bitcoin against Ethereum. So what do? We pull our volume profile. We get our important volume levels within that range. And I would say this, within this volume profile, we were bouncing from the value area low multiple times. Value area low, value area low, value area low. You get the idea. Bunch of holding. The value area low held all through here. We pushed up to value area high. We rejected. By the way, we rejected value area high once before. So we're chopping between value area low and value area high. This is that range trading that I talk about, where you're looking for longs near the lows of the range. You're looking for shorts near the highs of the range. Rejected value area high, come to value area low. Bounce value area low, come up to value area high. Reject value area high, come down to value area low. Bounce from value area low, but this time we got above the value area high, flipped it to support, had a fake out back inside of it, but we pushed up. Because we were flipping it to support and seeing a sign of strength here, we were able to push up and pushed up. And we grabbed some liquidity. Some very key actually, we didn't grab it. Okay, never mind. That actually is kind of bullish that we didn't grab that liquidity, that we front ran that. But this is a little bit of a bad sign here. We dropped to back test the value area high again. We saw a nice bounce, but rejected on a lower high, fell back inside your volume profile, and this is where it gets bad. Fell back inside, bearishly back tested, now that you fell back inside, this is the test to confirm reacceptance back within the range. That's what Bitcoin is doing right now, by the way, on our low time frame today. We accepted reacceptance back within the range, so we dropped to POC. The POC held, so we go up, test value area high again. Test value area high again. Test value area high again. You couldn't break out of it. Test it again. You couldn't break out of it. Chopping inside the volume profile, and then today, testing it. It looks like it wants to break out, guys, because we keep testing it. Now, I will say this. Back here, we kept testing the value area low. Eventually, we pushed up to value area high. Right now, we keep testing the value area high. If we do keep rejecting, we're going to come down to test value area low. But this is the range that I'd be trading, is this range. And of course, you can look at all your important volume levels within there. So you can turn on your naked weekly points of control, your naked daily points of control, check where those are. You can pull your important Fibonacci levels. You can check where all that stuff is within this range. For me, I'm not too interested in that. I know overall, the higher time frame analysis, I'm expecting Ethereum to break out against Bitcoin. And locally, I would just be trading this range, guys. Let's see there. Yeah, golden pocket here. I really like that level actually right here. Naked daily point of control, golden pocket, and liquidity grab. So let me turn this off. I would say if we break out right now of this value area high, we're going to come up to 0.35. You can see it's where your golden pocket is. It's where a naked daily point of control is. And most importantly, we have some liquidity resting into that level. So anytime, I've talked about this a lot on the channel, anytime you see a liquidity grab into a golden pocket, and if there's a volume level there as well, volume confluence level, in this case, volume resistance confluence level, that's a good level. So that would be a resistance area for me. Now, what could happen is you could break out, push up there, reject from this area, come back down to bullishly backtest that value area high, flip it to support to continue up to your next, you're just continue the trend. Higher highs, higher lows, higher highs, higher lows, higher highs. All right, let me check the chat here. I know I'm spending a lot of time on these. We will check out Portal. We will check out Solana. I'm going to go through Solana right now, but let me check this chat real quick. Okay, no liquidity. Crypto can't compete with stocks or metals. Yeah, right now it's gold and silver. I mean, they're taking off. Okay, but let's go ahead and run into Solana really quickly here. Okay, all right. Solana, I talked about this a little bit yesterday during the live stream, or during the video yesterday. There's not a whole lot to update on Solana either, guys, but we have our larger volume profile. It's pretty much a 2-year long range profile. Okay, so let me pull this, extend it all the way. You can see that this range, zooming out to the daily, goes back to March of 2024. It's this upper range after this impulse finished. We had a nice, huge impulse up here, and then we've been going sideways ever since for about 2 years. So within this upper range here, and this, by the way, this could be a long distribution. Left shoulder, head, right shoulder. If we lose this support that we're at kind of right now, we could drop significantly. We don't want to see that. I don't know if it's going to happen or not. I mean, we did have some pretty high time frame bear divs on this thing. But on lower time frames, or on looking zoomed in more at what's the actual price action that we need to focus on now, is this price action. And I covered this last week in the stream, but we rejected from the top of the pitchfork. It was also a weekly level up here at 252, and it was your macro 786 Fibonacci pulled from the all-time high down to the $96 lows. That was a 786 Fibonacci. Worked our way down through the pitchfork levels. You can see rejected the pitchfork band, rejected the pitchfork band, rejected the midline. Now we're chopping around pretty much in that band, but we've even started to lose the band now. But we're chopping around primarily between the macro point of control and the macro value area low. And we're we could be forming accumulation here, or it could be redistribution, unfortunately. Lower low, lower high, lower low, lower high, lower low, lower high, lower low. You know, you had a little bit of a liquidity grab here, but overall we're sideways now. So this sideways range, and I did say this over a month ago when we were first in here, I said, guys, it's likely that we form a range that could last months in here. It's either going to be an accumulation range or a redistribution range. So accumulation, we could see this is your tap 1. This is a tap 2. Maybe we work our way up one more time and then down to hit the bottom of the pitchfork. This is your tap 3. You have your inverse head and shoulders or bottom reversal pattern or model 2 Wyckoff accumulation, and then you expand up. So that's the bullish scenario. We want to hold this general level and see accumulation form over the next couple months in here. Whales buying accumulation, and then we want to see that expansion phase kick in. If we're in a bearish scenario and the bear market really is here, this could be dump, redistribution, people selling off here, selling off at the highs of the range, distribution to the downside and continuing to dump here. And that would also be a distribution of a larger possible distribution pattern as well. This could be the mini redistribution at the end of a much larger distribution that's been occurring over the past couple of years. That's a very bearish scenario for Solana, and I don't think it's the most probable, but we have to pay attention to it because we have high time frame bear divs, monthly bear divs, weekly bear divs. But within overall on Solana, we're at a very key macro zone of support, being that macro value area low, pretty much being the bottom of the pitchfork. And we're just trading this small range that we've been in, this small range here. And so we're focused on this price action. So now we can zoom in and we can just focus on that price action. And even within this price action, similar to Bitcoin, how it has its bigger range between 80.5 and 94.6, this range in here, we have the bigger range and then the smaller range. Well, Solana, much the same, has the bigger range and then even a smaller range. That's horrible. A smaller range here. So we can even zoom in, and at least over the past couple of weeks, you kind of had to trade this little range here. It's been a nightmare, but that's what the market is giving us right now. So you could be focused on the bigger range, but within the bigger range, you could be focused on this scalp range in here. And what we're looking at is just, trading the levels. So you can pull your volume profile of the bigger range. You want to know those volume levels. Pull this volume profile between the POC and the value area low. You're pulling it from that when we lost the POC to present day price action. And once you have that, let me hide this real quick. You have your important volume levels. You have value area high that's coming in around 137.5. Your POC is coming in around 132.6 or 132.5. And your value area low was where we bounced earlier today at 123. Actually, not one. I'm sorry, at 121.8. Okay, so that is your small range. Now, this is your largest range, your 2-year long range. I'm going to hide that volume profile so we don't get confused, but we're focused on this price action. But within this price action, you could even focus on the past week or so. And so that's where this small range comes into play. And you can just focus on this small range. Today, we dropped, or really yesterday, we dropped to the POC into the golden pocket. We saw it hold overall in a bounce. So is it likely that we test the value area high today? I mean, it is likely, in my opinion, that we come up to test the value area high at about, 127.2. Let's also pull our golden pocket from highs on the weekend, Sunday highs, to the lows from Monday. You can see where that golden pocket's coming in at, the value area high. Bitcoin has already hit its golden pocket and rejected from it. Solana has not come up there yet. But Solana might come up here and look at, you have a fair value gap in here, this imbalance in here. So for me, Solana might come up to reject from 127.2. If we come up to this general area and reject, you'd fill in this fair value gap, or a majority of it. Golden pocket, value area high. Maybe we're going to reject from there. There might even be a naked daily point of control in there. No naked dailies. What I would say here, though, you did break market structure bearishly. First off, let me go into this. Value area low was kind of holding. You were holding it. Yes, you were wicking past it a little bit, but it was holding as support. You kind of formed that range between the POC and the value area low. You were able to break above the POC, back test the POC right here. So that was important. That was after breaking above the POC, you back tested it. Once you held it as support, you got your big move up. You attempted to break out of the volume profile. You took some liquidity and then you dumped back inside the volume profile. So that was bearish right there. You took liquidity, which was important, and then you dumped back inside the volume profile. Here's the thing. We dumped all the way back down. We front ran the value area low, but we broke market structure bearishly. And that is important to know. Locally, yesterday, we broke market structure bearishly yesterday by coming below pretty much 123, this low right here at 122.97. That is a market structure break bearishly. So because we broke market structure bearishly yesterday, now we can have a greater possibility of making a lower high before making another lower low and actually coming down to hit the value area low and maybe the 786 in here. Or coming down and grabbing the liquidity at 119. By the way, you guys remember we had a box here, a daily level of support here, and our 786 Fibonacci. We were looking for longs from this area. And I know, Jawfield, you did take that long. If you go look at last week's stream, there was a box down here that I had marked out of support that I was looking for longs from. We also had the resistance up at this area at 129. 129. If you guys go watch yesterday's video, I did have a box up here. We still might have it on the chart. Oh, there's our box there. And then let's see. Yeah, I think I deleted it, but we did have a box of resistance at 129. Oop. So broke market structure bearishly here. Because we broke it bearishly, we might come up and reject from this area. Kind of grind your way up, reject from this area before coming down and taking out the lows here into your value area low, into your 786. And then it might just continue ranging sideways. We'll see. We'll see what happens. Or it could break down and continue down. You know, seeing a 1, 2, 3, 4, and then maybe a 5 to come grab the lows. We'll see what happens here. But for Solana, you know, we have two ranges really we want to be paying attention to. All the price action between the POC and the macro value area low. And then if you want to zoom in even more and scalp trade this thing, this is your range to look at. 127.2 or 127 to 127.25 would be the next area I'd be potentially interested in shorting. If you're going to look to short this resistance right here, I would want to see bear divs as we're coming up there. So you'd have to zoom in on the low time frame. You'd have to look at this market structure throughout the day today. You would want to zoom in on like the 15-minute chart, and from this market structure, high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. You'd want to see bear divs coming in. You'd want to see those bear divs coming into this golden pocket. 15-minute and under. That's where I'd be looking at. If you have 15-minute, 12-minute, 6-minute, 5-minute bear divs coming into that golden pocket, I would look for the short. Okay, guys, really quickly here, I want to talk about the partners of the channel. So the main partner of the channel is BYDFI. They are a VPN and KYC free exchange. All you need is an email and a password to sign up. If you do sign up using my affiliate link in the description, you can get a minimum of 20% discounts on trading fees, and you can actually earn up to 40% discounts on trading fees if you deposit some larger amounts into the exchange. They're offering up to $8,100 in futures trading bonuses, depending on how much volume you move in the futures markets. And they are also offering some of the best initial deposit bonuses in the entire industry. So, for instance, if you deposit $100, you can get a 50% deposit bonus. And then there are various 20% and 10% deposit bonuses, depending on how much you deposit. I have partnered with BYDFI, by the way, to create a Telegram community. Like I posted about the short earlier today in the Telegram. Right as soon as I finished it, I posted about it. The Telegram community is a private community, but it is free to join. The only thing you need to do to join is sign up with BYDFI using my affiliate link and deposit $100 into the exchange. That $100 is your money to trade with. You're not buying anything. It's just you're depositing money into the exchange to use to trade. You can get the 20% discounts on trading fees. You can get the 50% deposit bonus. You do have to KYC for that, or at least level 1 KYC. But once you've signed up using the affiliate link and deposited the $100, you can get into the Telegram. The Telegram link is in the description of this video, and it looks like, let's see. Yeah, R Pink has also posted that in the chat. Thank you, R Pink, for that. I appreciate that, man. So click the Telegram link, and once you're in that Telegram verify channel, you type in /verify in your user ID, which will be right up here, and then that'll get you access to the Telegram community. And once you're in, you are in. Okay, second partner of the channel is NAMI Trading, and NAMI is this momentum and money flow indicator down here. It's great for me. I use it for confirmations on my trades, like whether to enter a trade or not enter a trade, to take profit or not take profit. So NAMI, it's a great tool for me. Just like any profession, if say you were a plumber, you would invest in the proper tools to help you succeed in that position. And so for me, this is one of those tools for me to help me succeed in trading. So if you're interested in purchasing NAMI, they have partnered with the channel to give you guys 50% off. If you use my affiliate link in the description, you can get 50% off NAMI. So the link and the discount code, which is Divine50, is in the description of the video. And then lastly, I have Bybit and MEXC. They're both great exchanges, both offering some discounts on trading fees. MEXC is offering a 10% deposit bonus, and Bybit is offering up to $30,000 in futures trading bonuses. So it's a good way to help out the channel. If you guys want to sign up to a crypto exchange and you don't want to use BYDFI, I do have 2 other exchanges, and it's just a way to say thank you and to help out the channel. But enough of that. Let's get back to the TA here. Let's see. Let's go on. Let me check the chat. I know there was a couple coins that we were going to look at. We did ETH. We did Solana. Where was that? I know there was another one. Portal. Let's see. Is this the one we were looking at? I guess so, huh? All right, so Portal. It looks like we were looking at a couple different things on Portal. We were looking at the larger descending channel in pink. Let me hide this smaller one real quick. So we were looking at the larger descending channel in pink. And honestly, I know I've said this. This thing just looks bearish to me. You know, you had your initial pump on the listing, and then it's just been a sell-off ever since. So be careful with this one. I have no idea what this does. But since the October 10th crash, we've been going sideways. So at least we're starting to find a bottom here. Going sideways. And that's what you need to focus on right now. So within this sideways price action, of course, you have your volume profile of that price action. And it does look like locally we are rejecting the value area high of the volume profile. It is likely that we could fall to the at least to the POC around 0.188. That's also probably going to be where your golden pocket is. Let's do that. And let me check this. 71%. Okay, so golden pocket. Let's see, golden pocket, and then we'll look at our 786 here. Yeah, I would say the 786 is where I would be looking, because your 786 is going to be in alignment with that POC, or actually with the value area low. That's probably where I'd be looking for support. And you might just kind of grind down for a few days until you hit that 018 level. Let's zoom in on the 4-hour. And then I want to look at, we're going to hide this bigger range or this bigger channel. And we're going to go check out that smaller channel. Let's see. Okay, we were in this small channel, but we broke out of it. So yeah, and look at, since breaking out of the channel, you were kind of grinding side and down, came to the top of the channel, rejected, held the value area low, broke out of the channel, but you're rejecting from the value area high. So we might come down to bullishly backtest the channel. And if you hold it, you would expect to push up and at least take out these highs. So either way, that 18 cents has, or 018 cents has more confluence now too, because it's also going to be the bullish backtest of this channel that we broke out of. But let's hide that one. Okay, that's our big one. That big one is the same one, I think. Yeah. All right. And then we were looking at this channel as well. So that was based off of this smaller channel that we were in. We rejected from the midline, and then we lost it during the October 10th. After losing it, we were trying to get back inside of it. We really couldn't get back inside of it, couldn't get back inside of it. We finally got back inside of it, flipped it to support. And so once again, coming down near the bottom of the channel to see if you can hold it again. So between the golden pocket and the 786, I would say, let's throw on that, both of them. Because you can see your golden pocket's going to be at the bottom of the channel. Golden pocket and then your 786. That's the two levels I'd be looking at locally on this thing. You're either going to bounce from like 19.6 or 18 or 0196 or 0181. But you could you could look at some naked dailies in here. Let's see if we have any naked dailies. Yeah, you do have a naked daily at that golden pocket as well. So actually that golden pocket is still going to be an important support level. Naked daily there. So the two support levels, this guy here, and then I would be looking at, if you lose that, I would really be looking down here. That it's going to be your 786 value area low and a different channel, bullish backtested channel. So and that's of, where is it? This guy here, the bullish backtest of the channel. You might even do something like this though. Bounce from this for a bit, lower high, and then come down. Overall maintaining within that bigger channel. So we'll see what happens there. But that's what I'd be looking at. And then if you do hold either of these support levels, then I think you might be able to work your way up to take out this liquidity up here. And even this guy at 028. But I would play this sideways range. This is your very clear sideways range that you're in. Okay. Let's check Bitcoin real quick. What is going on here? Yeah, unfortunately, looks like you did reject from that VWAP on the bearish backtest. So you see how, and in this case, it was the Bybit VWAP, but you lost it, backtested it, you rejected. So you would at least expect to come down below this low. But we're probably going to kind of continue down here. You are seeing more longs come in, but it is shorts getting stopped out because your open interest is dropping. So some late shorters were getting stopped out primarily on that rise there. Yeah. You saw a little bit of long stepping in this general area, but they're not really doing much. Okay. Honestly, guys, it's going to be probably boring. It's probably going to be boring. We're probably going to be within these two ranges. This is our bigger macro range. Okay, that's interesting. So let me go to the 4-hour. Yeah, what is nice and somewhat of it's bullish here. This is our macro volume profile the entire year of 2025. And as far as volume profile trading goes, you can see that we were below the value area low. We pushed back into it, small rejection from POC, but we were able to break up and flip that POC or break above the POC. So, of course, you expect to work your up to value area high. And we pretty much did. We front ran it a little bit. And I bet you at the time your value area high was in here. But the breakout of the volume profile, the back test, when you held this here, you expected to make new highs. We did. Then you fall back inside, a little bit of a deviation back inside. You chop around. We took liquidity, formed that distribution range, but this is what was important. After you formed that distribution range up here, you fell back inside your volume profile. And now we've worked our way down to the value area low. We did lose the value area low, but we were able to reclaim it pretty much right away, hold it. And now throughout the last week, the value area low has been holding. I don't know if you guys can see that clearly. Let me get rid of all of this. But the value area low of our macro volume profile on Coinbase is holding. If it continues to hold and we start to break this little range, this is where 91K could be. I'm still going to be looking for shorts here, but you're not going to randomly take a short here, guys, because we could be holding this, break out here. We might not see the liquidity grab. We might actually break the range to the upside and come up to hit the POC. So because we're holding the value area low. So 91 to 91.5 is resistance, but you do not want to random or set limit orders there and hope it plays out. You want to wait for the reaction there because this could break up and come up to 96.5 where your POC is. And it would also take out all of this liquidity. And then we might see, sort of a bigger 3-wave corrective move and then a dump. But within that bigger corrective move that looks like it's happening, and the reason why I'm saying this could be a bigger 3-wave corrective move like this before dumping is because so far this does look like a corrective move. Nothing in this tells me that this is not a corrective move so far to make a lower high before making another lower low. So 96.5 would be a real nice area to reject from. Everyone would get super bullish because we'd probably, within this move up here, we'd probably be impulsing a smaller time frame impulse. A lot of people would probably long the breakout of 91K. And then they could get trapped pretty easily, giving us the fuel to push down to 78. They would be in profits for a while from 91 to 96. If they don't take profits at 96, they could get trapped in that and drop. Now, if you do break above 96.5, I mean, the next level I'd honestly be watching is that weekly moving average around 102. 101.5 now. Okay, let me check the chat. 70K Bitcoin incoming. Yeah, Dream Tanks TV. I actually agree with you overall. So my overall premise, guys, if you've been on the channel for any amount of time, I've covered this scenario in depth on the channel. Let me zoom out to the 3-day time frame. Okay, so what we've been looking at on Bitcoin is we're in process of a larger flat correction in here. But we had our nice clean 5-wave impulse to the upside for the bull market. It ended in January, or what was that? February, middle of January, January 19th. And we broke market structure bearishly by taking out these range lows here. So that means because we broke weekly market structure bearishly, you could say, hey, this impulse was finished. Then we came up, we made new all-time highs right up into our pitchfork midline, but it was also our zone for a flat correction between the 1.236 and the 1.382. We rejected right in that zone, and now we could be in our C wave to the downside, which is an impulse. And so far, this does look impulsive from the all-time high down. So far, it does look like an impulse, an incomplete impulse. But the target for this C wave, the minimum target, or I don't even want to say the minimum target, because there's something called a running flat where you don't take out the lows of your A wave. You make a higher low, you don't take out the lows of A, and then you push up. So a running flat is still possible here. But in a more probable in this C wave down is to take out the 74.5K lows, your A wave lows. Does that mean we have to come down to 70K? No. It could just be a liquidity grab of 74.5 into this pitchfork band, and then we could start to push up here. But with our macro golden pocket being between 70 and 68, it's also the value area high of this 8-month-long range from 2024. And it's your prior bull market highs between 65 and 69, right in that general area. I would say overall, I think if we do start to drop and lose 80K, it's very possible we could come to 70K. Still waiting for that dump to lock in long term. Yeah, I am too. Because this push down that we've seen from the all-time high so far, let me zoom in now to the daily time frame. The dump from the all-time highs that we've seen so far looks impulsive. Whether you want to count this as a wave 1, wave 2, wave 3, and we're kind of in our wave 4 now before seeing a wave 5 down, you could count it that way. Or if we go to the Coinbase chart, which is a little bit different, you could look at this as a wave 1, internal wave 2, internal wave 1, internal wave 2. This is a 3. This was a 4. And then we could be about to 5, 4, 5, excuse me. You could see some, if you have 2 1 2s, you'll need to see 2 4 5s. So either way, it looks impulsive to the downside. And if you turn on your volume was increasing significantly on the dump to the downside, meaning that this is more likely to be a motive wave to the downside, an impulse to the downside. And it looks unfinished. Either way you count it, 1, 2, 3, 4, we still need a 5th wave down. Or if you look at the double 1, 2 impulse, you still need a couple 4 5s to the downside. And we could be in the process of making a really long complex 4, which does make sense in a larger move down. 4th waves are often longer and more complex than 2nd waves. So yes, I agree. Another thing here, from the 80K lows, you can see that nice spike in volume at the lows. But this entire move up that we've seen here, volume is getting lower and lower and lower and lower, meaning that this move, volume-wise, tends to look more corrective as well. So not only with price action, but with volume, this range that we've seen so far looks corrective, meaning that eventually, sure, can we come up and take out the range highs first? Yeah. Before dumping? Yeah, but it does look like it's a greater probability on macro timeframes to make new lows below 80.5. Okay, going Abyss Bulls week. Yeah, we might be Tiki Taku, welcome in, man. We might be going into the Abyss I agree. The bulls do look weak. I mean, it's just a weak market in general because there's no volume. People are not trading right now this week, since Christmas. Oftentimes, a lot of the big quant firms, a lot of the institutions will take off the end of the year, Christmas through New Year's. That 2-week time frame, a lot of the big boys aren't trading and it's more retail focused. So yeah, you can look at this, it just looks like we might be kind of stuck for a while in a holding pattern. Another thing on the daily time frame, look at all these wicks to the upside. I know we see some wicks to the downside as well, but wicks to the upside, 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 wicks, like that just doesn't look good. We've been seeing small pumps followed by small dumps. Pump and dumps. Kind of that's what I talked about on the thumbnail of this channel. Is this another fake pump before another dump? Let's see. Do you see us dumping to 86K first or pumping to 91K first? Lost X, that's a very good question, and that honestly, that's hard to answer. The probabilities right now are probably 50-50. I know that's a cop-out answer. Actually, I think it's more likely now to dump to 86 first. Okay? And the reason why is because if we look at the volume profile of this small range that we've been trading in for the past 15 days, this guy right here, we fell back inside the volume profile. So on the weekend, we attempted to break out of the volume profile. We rejected a naked daily point of control, and it was also the top of our pitchfork, our bearish pitchfork. Naked daily point of control, bearish pitchfork in there. We rejected it, and then we fell back inside your volume profile. So after attempting, we fell back inside. We came to value area low, bounced from value area low. So we come up to value area high. If you reject after finding reacceptance back within this volume profile, we rejected the value area high now. So now it's likely that we come down and take out the liquidity of these local lows. So I do think it's more probable that we come to 86.3 first. 86.3. We also have some support at 85.7. And guys, I talked about this yesterday in the video, but at 85.7, if we look at our liquidation heat map, you can see that a majority of that liquidity would be taken right around then 85.7, 85.6-ish, all this liquidity cluster that's in here, taking most of it out would be about 85.8, even coming 85.7. So knowing that liquidity cluster would be fully taken into this support level here, this support level was a 786 Fibonacci. Let's see, where is it at? I can get rid of that. Let me just pull it real quick. So if we go from the lows, local lows to those local highs, you can see your 786 Fibonacci at 85.7, 15. And then I believe we had a naked daily point of control there or a daily level there. We had some other confluence. Value area low. It was our value area low of our bigger range. Of this bigger range. So let me turn off the smaller range. And we'll turn on that bigger range. Value area low is there. So you see bigger range, value area low. 786 is there. So we might dump. Now that we're rejecting on a lower high, we might come here first. And then here, and then maybe. We also have at 83.8 to 83.6 another support level. Swing failure pattern into your 786. So this guy right here, let me just pull this more sideways. We've had this on the chart for at least 3 weeks now, I think. But you can see this liquidity grab in here. Why is that still there? 786 is there at 83,500 or 545. and you have your liquidity grab. This should have an alert on it too. So we have some levels to look at. So we have some more scalp levels within the smaller range, and then we have some bigger day trade levels within the larger range. But right now we're in a holding pattern, waiting for the end of the year to play out. And honestly, that's about all I have to talk about, guys. Yeah, thank you, Dream Tanks TV. Appreciate that comment, man. 125 was the top. It's looking more and more like it, man. It is looking more and more like 125 was the top. I mean, Jason Casper's gone over this pretty much in depth too, and I highly respect him, not only as a person and not only as a trader, but as a person. But he's a very good trader. And looking at, like, let's just go to this index chart and let's go to the monthly time frame. What's very concerning to me is the high time frame bear divs that we're seeing. So you can see really from the last market cycle highs to this cycle's highs, bear divs confirmed. But within this cycle, from 2024 all-time highs to the January all-time highs to our current all-time highs, triple drive of bear div on the monthly time frame, and money flows consistently drained out for 2 or 3 months now. You can also see NAMI, bear divs, and this is the scary part, from last cycle's all-time highs, bear divs on money flow, but then within this cycle, bear divs on money flow. So we have the ultimate setup that I look for. Bear divs on momentum waves on Market Cipher B and Market Cipher money flow topping out and curving to the downside. And with NAMI, you see momentum bear divs and money flow bear divs. This is like this signal hits for me, I would say at least 80% of the time. I haven't done, to be honest with you, I haven't done the statistics on it, but I know it's a high percentage confirmation when I see both of those. We're seeing both those on high time frames. That means the top could be in. Another thing to look at is this channel. This channel was pulled from the 65K high to the 69K high down to your 15.5K lows. And even though the channel was pulled, the third pivot of the channel was pulled after this price action, you can still see this price action was respected because it's based off human psychology, which hasn't changed. And when a trend or a tool has been more respected in the past, it's more likely to be respected in the future. Well, within this channel, if I zoom into the weekly time frame, this is what was scary. Well, first of all, we flipped the midline to support, chopped around for 2024. We came up to the top of the channel and we couldn't. So first of all, this was a little bit of a distribution range at the beginning of the year, chopping right around the top of the channel. But this here, we broke out of the channel. We back tested it. We held it. So then we made a few new all-time highs. You expected to, once you held it, on the bullish back test, once you held it right here, you expected to make new all-time highs. And we did. Okay, so after making new all-time highs, sorry guys, let me get this situated. After breaking out, bullishly backtesting it, holding it, new all-time high, new all-time high, new all-time high. But this was that distribution range. You had the distribution range and then you distributed back inside your channel. And you can see finally when we closed this weekly candle here, pretty much right at the channel support. But then the very next week, big bearish engulfing candle dumping back inside the channel. Very bad sign. Not only have we dumped inside the channel, but look at, you lost your anchored VWAP from the last major low pivot. All of this volume confirmation, you're losing it. And now look at it. It's resistance, 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 resistance. If you can't get back above it, you're going to keep dropping. And it would be likely to take out the liquidity here. and potentially even drop to the midline of the channel, which would be very interesting. And I think this could be the bottom of the bear market. If we're going to go into a bear market, I think 49.50K could be the bottom. And if we pull, we'll put the 0.5 on, but we have to put that on log scale. Yeah, even 44 would be nice. Between 49 and 44. Liquidity at 98K. We could come up to 98K. The thing with the liquidity at 98K is you have some major resistance at 96.5. So could we come up there? Absolutely, we could. 98K. Yeah, I see what you mean. Like maybe this liquidity up here of these little highs in here. But that's closer to 96.5. That's actually where your POC is. We turn on that major range POC. You'll see that macro range POC, look at, so the liquidity from this little consolidation right up into there. So it would be more likely to reject from 96.5 rather than 98. But I get what you're saying, and we could come up a little bit higher to backtest that Fibonacci channel again, which would be around 98, 99K, depending on time and dumping. Let's look at our heat map over the past 3 months. This is the aggregated heat map, so it's taking into account all the major exchanges. You have some very key liquidity resting above the 116K highs. And then, but look at, it's at like 96.5, 96, 97. Liquidity resting above those highs I was just talking about. And look at where, I mean, this liquidity is down into 70K. This liquidity below us is right into that golden pocket at 70K. And then, of course, at 109, 110. This is also going to be very important liquidity at 109, 110. And I'll tell you why. Let me go back to the index chart here just to have a cleaner chart. Not that one. Just go here. So at 109 to 110, if we pull our current golden pocket from the all-time high down to our 80.5K lows. Now, here's the thing. The golden pocket, this is more than a 30% drop, right? And if you have more than a 100% pump to the upside or more than a 30% drop to the downside, this is a 36% drop. You need to take this Fibonacci, if you're on the logarithmic chart, that is, and you need to come into settings and base it off log scale. And you can see, God, that would be so perfect too. Look at that. You fell back inside your macro channel. You had the immediate back test. Say we do chop around here, maybe just take out the lows at 80.5 and then make a move up. Macro, lower high golden pocket in confluence with liquidity, in confluence with the back test of the channel. You could do something like that as well. We have no idea what it's going to do yet. And to me, it's more likely locally for this to be an unfinished impulse to the downside. But let's say we do. We could even come up to 107K, 108K. Taking out some very key liquidity. Another thing to look at, though, on the 50 moving average, 50-week moving average. Let me go to the 3-day chart. Historically, the 50-week moving average, once you lose it, you can see in your prior bull market here, prior bull market held as support, held as support. You did wick a little bit past it here, but overall it was held as support. But once you finally lose it and start to close weekly candles below it, you have that big kind of range. This is very similar to what we could be seeing now. And actually, I'm going to do a little experiment in a second here. But you bearishly backtest it, you reject, and then you continue the bear market. So this is the first time where we've lost it and we're starting to form that range. So I want to do a little experiment. Let's take our bars pattern because we know that the markets do not repeat, but they rhyme. Let's grab our bars pattern and let's look at this low to this high up here. Let's take this and let's bring this over here and match it. You could be looking at something like that. I mean, it looks pretty dang similar to me, right? You could be looking at a big range in here that could last another, 2-3 weeks, even coming up to backtest 101K before rejecting and continuing lower. Yeah, distribution range classic. Yep. I mean, it was, huh? And for me, distribution ranges like this range here back in November through January, I was telling everyone this is highly likely to be distribution. I actually made a video on it on my channel, on my YouTube channel. You can go look it up. Just type in like Wyckoff distribution, Divine Hood trading. But as this range was forming here, confirmed bear divs and money flow draining out as the range was forming, I said, guys, I showed you a model 1 that could be possible. I showed you a model 2, and I even showed you a possible reaccumulation where this could have been a spring and then you could have reaccumulated and pushed back up. But I said, I showed all 3 possibilities. And at the end of the video, I said, if you guys want my opinion, it's likely that this is a distribution range because confirmed bear divs and money flow draining out as the range was forming. And it was likely they were going to distribute down. Now, it was like another week and a half later, we did do distribute down. So I tried to warn ahead of time that that was a distribution range. Earlier this year, in this area, I said the same thing. I said, guys, this looks like it could be distribution range. Be careful. And bear divs confirmed money flow had been draining out of the range as the range was forming. Distribution. But yeah, how much liquidity we have on the 2-week heat map model 1. Okay, model 1 heat map. Let's go to model 1. Let's go to 2-week. Yeah, wow. 215 million, you know. Actually, it's quite a bit. It's a lot of liquidation. You can see all through here. Close to 350 million total, like $350 million or so. A lot of liquidity resting below. Right down into those 86K lows. That very likely to be taken. Guys, I don't see us pumping up to 96 or 98K at least without taking this out first. Like the market makers are not going to leave that there and pump up to 98K, 96K. So what I would say is even if we are going to pump up there, locally, it's more likely that we do push at least down to take out that liquidity first. All these higher lows in here that are just barely higher lows come down, sweep that liquidity, and then you might get the push up. I don't know. We'll see, but we might not even, we might do something like this and then reject on a lower high and then continue down, seeing a couple 1-2s in here, a big third wave, and then some 4-5s at the end. We'll see how that, and obviously these would be bigger. They would be, you have your third wave, and then maybe we're going to get some 4-5s into your 78K support. See a flip here, lower high, before coming down and taking out your 74K lows, completing that C wave. There's a lot of possibilities. We don't have to know as traders, we don't have to know what's going to happen. We mark out our key levels of support and resistance. We set alerts or we watch the charts and we react once it gets to those levels. If there's long opportunities, even if it's a scalp long opportunity, you can still long against the trend. The bigger trend is down, but you can still long against the trend and take profits. Knowing if you're trading against the trend, you need to look at that trade first as a scalp trade that could turn into a day trade, that could turn into a swing trade. But at first, you're going against the trend. So if you're longing this, you want to take profits and then move your stop to break even and then say you could keep going. All right, ride the rest of that. You could even compound it on pullbacks. But knowing that you're going against the trend, it could be a bounce to make a lower high and then continue making lower lows. So you would at least want to take some profit and then set your stop to break even. That way, if you get stopped out, it's still a win. But all right, guys, I've been live for 2 hours. I do have some stuff to do today. Not a lot is happening. We did reject from that lower high golden pocket value area high. And to me, it's likely we do come down to 86.3 to take out that liquidity. I probably might try to stream tomorrow. It depends. I'll let you guys know. I'll be in the Telegram. Remember, to join the Telegram, all you have to do is sign up with BYDFI using my affiliate link, deposit $100 into the exchange. And once you've done that, click the Telegram link in the video description, type in /verify in your user ID, and then you'll have access to the Telegram. And I'll keep you guys updated on what I'm doing with my short in the Telegram. I'll keep you guys updated whether I'm going to stream or not tomorrow and also for Thursday. So thank you all so much. Oh, Mind Tapestry, welcome in, man. It's good to see you here. Yeah, I'm about to end it, though. We've been live for a couple hours now. But thank you guys so much for being here. I appreciate all of you guys. Happy New Year to all of you guys as well. Guys, I want to make 2026, I want to make this community so much bigger, so much better, successful. So we're going to really focus on nailing down trades. We're going to focus on risk management. And I'm not going to force trades live while we're live just for the sake of trading while we're live. But I really do want to try to get into more trades during the live streams and walk you guys through the process of risk management. So come join me for 2026. We're trying to build something special here. And I just appreciate all of you. Thank you so much for everything. Kind comments, the support you guys give. And I will see you probably tomorrow, maybe